Certainly, if you look at the headlines, I think, and consensus, probably it disappointed a little bit what investors were expecting. I think the government's in a difficult position because they obviously want to stimulate growth. Growth has slowed, and as it has, and they need to improve that. But they're also limited room in terms of the budget deficit that they have. So I think that the problem with India is that some of the private sector's been penalised, and that certainly there are a lot of negative headlines around the insurance companies and the financial sector. And then, of course, you've got the structural issues like the defaults that we saw in the financial sector in the last couple of years that haven't really been addressed. But again, I've been looking at India for close to 20 years. I think you never invest in India because of the politics. There's always a bit of disappointment about getting policies through. But I think the direction of travel has still been positive. You remember the corporate tax cuts last year, for example, but consumption's slowing and we need a structural uptick because valuations in India are relatively expensive. But I would also say that despite all the volatility, whether it's interest rates, whether it's economic growth, some companies in India have been very successful over the last 10 or 20 years.
What excites you with regards to India compared to the rest of the region? I mean, what makes the structural story in India, despite all the challenges, so compelling?
Look, I think there's good structural growth, and we would say that despite those negative headlines in the financial sector, no, but if you look at the financial sector, I can think of mortgage companies or banks. Some of those have achieved structural growth of 10 to 15% consistently every year over the last decade, despite interest rates being double-digit, then moving to single-digit. So there are opportunities. The consumer companies, some of the, whether it's been the multinationals that are listed there, the subsidiaries that are listed in India, or really good domestic brands, have delivered very strong structural growth. So I think that there's good private sector companies and they've delivered stronger earnings growth. I think in fairness and to provide balance, that earnings growth has disappointed in recent years relative to expectations. But earnings growth in India is still quite good relative to the rest of the region.
Andrew, does it worry you, though, that perhaps not enough has been done to really clean up the banks? Because we've heard from a few investors who say, look, until they really solve this problem, solve more of the NPL problems sitting on some of the bank's books, it's difficult to stimulate the economy.
Yeah, that is a valid concern and that worries us. But then again, it depends on what's your area of focus in the companies. If we're looking at banks that are more towards the retail part of the market and have a consistent track record of, mortgage business, for example, then we think that these companies can still be quite successful. But I think you want to see the structural clean-up of those banks and the property sector, for example, where there's been some defaults, and that should stimulate more growth going forward once these issues are addressed.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.